If you answer yes to even one of these 6 questions, your Social Security check could shrink starting this year. And most people watching right now have no idea any of these rules exist. You don't need to answer yes to all 6. One is enough. Stay with me because question 4 is the one almost nobody knows about until the letter shows up. Let's start with a viral news report about Kara Kendall. Kara Kendall lives in Miami Township, Ohio. She received a Social Security overpayment notice tied to her disability benefits, demanding she pay back more than $17,000. She told a local news investigative team she went into full panic when the letter arrived. When asked if she'd ever figured out what actually caused the overpayment, she said no. The Social Security Administration never explained it to her. They just sent the bill. That case was reported by an investigative news team in Ohio, and it's one of thousands like it that surfaced after the SSA's overpayment policy changed twice in 2 years. Kara didn't do anything wrong. She just got caught in a system that often can't explain its own mistakes before it demands the money back. Keep that story in mind, because question 2 is exactly what happened to her. Question 1. Are you collecting Social Security before your full retirement age and still working a job? According to the Social Security Administration's 2026 fact sheet, if you won't reach full retirement age this year, the SSA withholds $1 in benefits for every $2 you earn above $24,480 annually. If you will reach full retirement age sometime in 2026, that threshold jumps to $65,160, and the withholding rate drops to $1 for every 3. Here's what that looks like in real numbers. A 64-year-old who claimed early and takes a part-time job paying $50,000 a year is $25,520 over the limit. That triggers $12,760 in withheld benefits for the year, according to a 2026 SSA earnings test breakdown. For someone collecting $1,920 a month, that is over half their annual benefit gone. Now picture someone closer to full retirement age, earning $70,000 in the months before their birthday. They're $4,840 over the higher threshold, which works out to $1,600 withheld for the year. A much smaller hit because the rules get more forgiving the closer you are to full retirement age. The reassuring part the SSA doesn't advertise loudly enough is that this money isn't lost forever. Once you hit full retirement age, your benefit gets recalculated to credit you for every month that was withheld, so you do get most of it back over time, just not on the schedule you were expecting. If this applies to you, the fix is simple. Call the SSA at 1-800-77-21213 and tell them your estimated earnings for the year before you start collecting, so they can withhold gradually instead of hitting you with a surprise bill after the fact. Question 2. Have you ever received an overpayment notice from the SSA, even one you thought was resolved? This is the one that changed twice in just the past year, and most people watching haven't kept up with which version is currently active. In March of 2024, the prior administration capped default withholding at 10% of your monthly benefit after years of reporting on people losing their entire checks. In March of 2025, that policy was reversed, and the SSA briefly moved to withholding 100% of benefits until the overpayment was repaid, affecting hundreds of thousands of people according to Kaiser Family Foundation reporting at the time. After public backlash, the SSA settled on the rate active right now, 50% of your monthly retirement benefit or 10% of SSI, withheld automatically starting roughly 90 days after the notice if you don't take action. Here's a number that matters more than people realize. The SSA's own Inspector General found that 73,000 overpayments in a single recent year were caused by the agency's own calculation errors, not by anything the beneficiary did wrong. If you got hit with one of these notices, you have 3 real options, and most people only know about one of them. You can file Form SSA 561 to request reconsideration if you think the overpayment determination itself was wrong. You can file Form SSA 634 to request a lower monthly repayment rate if 50% would create financial hardship. Or you can file Form SSA 632-BK to request a full waiver if the overpayment genuinely wasn't your fault and you can't afford to repay it. While any of those requests are pending, the SSA is supposed to pause withholding, which means filing fast matters more than filing perfectly. This channel exists to track exactly these kinds of changes the week they happen, because the rules move faster than most people can keep up with on their own. If that's useful to you, subscribe now so you don't miss the next one. And let's keep going, because the next question affects almost nobody you'd expect. Question 3. Did you get married, divorced, or change who you're living with in the past year while receiving SSI? Marriage triggers something called spousal deeming, where part of your new spouse's income gets counted against your SSI eligibility, even though it's not your money. According to the SSA's 2026 SSI rules, the maximum individual benefit this year is $994 a month, and the maximum for a couple is $1,491. If your spouse's countable monthly income after deductions comes in above roughly $497, the SSA starts treating you as a couple for benefit purposes, which can shrink your payment significantly or eliminate it outright. The flip side almost nobody mentions. Getting divorced can actually increase your SSI payment because your household income just dropped on paper. The SSA also applies a $3,000 combined resource limit to married couples, even when only one spouse is SSI eligible, which catches people off guard when a new spouse's savings account gets folded into the calculation. Either way, any change in marital status has to be reported to the SSA within 10 days after the end of the month it happened in, and missing that window is how a lot of these cases turn into overpayment notices down the road. Question 4. Is a family member or roommate helping cover your rent, your utilities, or your groceries while you're on SSI? This is officially called in-kind support and maintenance, and it is the rule almost nobody knows about until their check comes in smaller than expected. According to SSA guidance for 2026, if someone else is paying part of your housing or food costs, the agency can reduce your SSI payment by as much as $351.33 a month, depending on how much support you're receiving and how it's documented. The part that catches people off guard is that this applies even to well-meaning help from your own adult children or a roommate splitting bills informally. There is one notable exception worth knowing. If everyone in your household receives a public assistance benefit like SSI, TANF, or SNAP, the SSA generally doesn't evaluate in-kind support from other household members at all, on the assumption that everyone in that home needs their own income to get by. If you're not sure whether your living situation qualifies for that exception, that's worth asking the SSA directly rather than guessing and risking an incorrect reduction. Question 5. Do you have more than $2,000 in countable resources as an individual, or $3,000 as a couple, while receiving SSI? This limit has not been adjusted since 1989. If it had simply kept pace with inflation, it would be sitting above $5,000 today. Instead, it's frozen exactly where it was almost 4 decades ago, which means a modest savings cushion that felt completely safe a decade ago can now put you over the line without you realizing it. The SSA evaluates your resources on the first day of every month, so even a large tax refund or a holiday cash gift that lands in your account at the wrong moment can temporarily disqualify you. Certain things don't count toward this limit, like your primary home and one vehicle, but a second small savings account, an old life insurance policy with a combined face value over $1,500, or retirement accounts you're able to access can all push someone over without warning. If you're trying to save beyond that limit without losing SSI, there's a legitimate tool for it, an ABLE account. As of 2026, anyone whose disability began before age 46 can open one, and the first $100,000 held in that account is completely excluded from the SSI resource count. That's one of the only legal ways to build real savings while staying eligible. Question 6. Did you forget to report a change to the SSA within the required window, whether it was income, an address, a marital status change, or a living arrangement? According to SSA reporting rules, most changes need to be reported within 10 days after the end of the month they occurred in. Missing that window is one of the most common ways an overpayment notice gets generated in the first place, which loops you straight back to question 2 and the 50% withholding rate that's active right now. The good news is that reporting a change is usually fast. You can do it through your online My Social Security account by calling 1-800-772-1213 or in person at your local field office, and getting ahead of a change before the SSA catches it themselves is almost always easier than untangling an overpayment after the fact. So here's the summary. 6 questions, and you only needed one yes to be at risk this year. Working before full retirement age can trigger the earnings test and withhold over half your annual benefit depending on how much you earn. An old overpayment notice, even one caused entirely by the SSA's own error, like what happened to Kara Kendall in Ohio, could mean 50% of your check is being withheld right now under the current rate. A marriage or living change can trigger spousal deeming on SSI and shrink or wipe out your payment. Help from family with rent or groceries can quietly reduce your SSI payment by over $350 a month, unless your household qualifies for the public assistance exception. A resource limit frozen since 1989 can disqualify people who think they're still safely under it, though an ABLE account can legally protect up to $100,000 from that count. And missing a 10-day reporting window can create the very overpayment that costs you the most. None of these are theoretical. They are the current active rules as of 2026, and the SSA is not going to call you to walk you through which ones apply to your situation. Send this video to someone you know who's on Social Security or SSI right now, because the odds are good that at least one of these 6 questions applies to them, and they have no idea.